back to my YouTube channel, Rabia's Lifestyle UK. If you've ever wondered what the stock market really is and how it can help grow your savings, you're in the right place. Let's start from the introduction. What is the stock market? The stock market is a collection of exchanges where investors can buy and sell shares, small ownership stakes in companies. Stocks are traded mainly on platforms like the New York Stock Exchange, NYSE, and NASDAQ, but many other global exchanges exist, for example, LSE, NSE, SSE. Collectively, these trading venues form the stock market, where price discovery and liquidity take place. Origins and early history. The world's first modern stock exchange began in Amsterdam in 1602. Trade shares of the Dutch East India Company VOC. U.S. exchanges evolved in the 18th-19th centuries, culminating in the New York Stock Exchange, NYSE, based on competitions of floor traders using open outcry. Market structure. Primary versus secondary market. Primary market. Companies issue stock via IPOs to raise capital. Secondary market. Investors buy and sell among themselves post-IPO. Stock exchanges and electronic trading. Major global exchanges include NYSE, NASDAQ, since 1971, first electronic exchange. Trading shifted from floors to electronic systems in the late 20th century, enabling algorithmic trading, 24/7 matching, and flash crash. For example, 2010. How stock market works in 2025. Market structure and evolution. Rise of off-exchange trading. In the UK, nearly 40% of equity trades now occur through bilateral arrangements and dark pools, not central order books, prompting the FCA to explore clearer trade reporting to ensure transparency. New venues emerging. The planned Texas Stock Exchange, backed by firms like BlackRock and Citadel, aims to launch as a fully electronic U.S. exchange in 2026, intensifying competition with NYSE, NASDAQ. Automation and AI electrify markets. Trading operations are driven by ultra-fast AI-powered systems, leveraging machine learning for smarter order matching, predictive strategies. How trading works today. Order flow. Investors place market or limit orders, including details like ticker, buy, sell side, price, and quantity. These orders are aggregated across 16 plus U.S. trading venues. Market makers' role. Firms maintain continuous bid-ask quotes to ensure liquidity and earn spreads. Arbitrageurs align assets, ensuring ETFs remain tethered to NAV. Dark pools and private platforms. Non-public venues like Intelligentris handle up to approximately 3% of U.S. equities volume, creating debates over fairness and price transparency. Market dynamics in 2025. Volatile spring markets. The April 2025 Liberation Day. Tariffs caused markets to briefly crash and -1 to spike, marking one of the most volatile periods since 2020. Resilient equity performance. Despite volatility, U.S. stocks closed the first half of 2025 near all-time highs, driven by retail investors' share buybacks and stable tech valuations. Valuations and sector leadership. The S&P 500's forward PE surged above 22 versus long-term average approximately 16, with big tech and AI stocks leading, though analysts warn of bubble conditions. Current trends and investor strategies. AI hype versus bubbles. Strong growth in AI stocks has raised bubble alarms. Advisors recommend balancing with stable dividend payers like utilities. Bond fallback and equity edge. With bond supply high and yields low, equities buoyed by share buybacks are currently more attractive. Macro outlook for H to 2025. Wall Street forecasts a further 0.5 to 6% rise in S&P 500 by year, and amid possible Fed rate cuts. Accompanied by risk from tariffs and geopolitical tensions, rewards of stock market investing. 1. Long-term growth potential. Historically, stocks have delivered average annual returns of around 7 to 10% after inflation. Over decades, this growth significantly outpaces safer options like bonds or cash savings. Compound returns and dividend income. Reinvested earnings and dividends generate compound growth turning modest starts into substantial portfolios. Liquidity and ownership. Stocks are easily bought and sold on exchanges, providing quick access to cash. When you hold a stock, you own part of a company and may even vote on key decisions, fostering a sense of stakeholder engagement. Diversification opportunities. The stock market spans sectors, regions, and company sizes, enabling effective diversification, reducing risk by avoiding over-reliance on any single investment. Company-specific and business risk. Individual businesses can underperform or fail due to mismanagement, competition, or industry changes, potentially wiping out an investor's capital. Economic, inflation and interest rate risk. Broader factors like recessions, inflation, and changing interest rates can depress earnings across markets. Inflation can erode real returns, and rising rates often drive share prices down. Liquidity risk. Not all stocks trade with high volume in volatile markets. Selling less liquid holdings may require accepting lower prices than their fair value. Emotional and behavioral risk. Many investors are swayed by fear and greed, leading to panic selling or chasing hot stocks often at the worst possible times. Leverage and derivatives risk. Using borrowed money or complex instruments like futures can amplify losses far beyond the initial investment. Summary Cologne. In 2025, the stock market has been defined by extreme volatility, structural change, and resilient recovery. Early in April, aggressive trade tariffs nicknamed Liberation Day triggered a sharp sell-off, with the S&P 500 plunging roughly 12% in under a week, the worst drop since 2020, before rebounding in May and hitting new highs by late June. Much of this rally was fueled by mega cap tech, especially AI-related stocks, which helped Nasdaq surge approximately 26% from its April lows. Despite this strength, rising valuations with S&P's forward P climbing above 22 have raised concerns of an AI-driven bubble and prompted investors to look towards stable, dividend-paying sectors like utilities. On the structural front, off-exchange venues like dark pools and alternative trading systems have come to dominate, with over 50% of U.S. equity volume occurring outside public exchanges, boosting execution efficiency for institutions but reducing transparency and fragmenting liquidity. Regulatory bodies like the FCA are warning that similar trends in the UK could hamper listings and price discovery. Looking ahead, major banks anticipate the S&P 500 climbing another 5 to 6% by year end, driven by possible Fed rate cuts, easing trade tensions, and continued earnings strength. Yet caution remains due to geopolitical risks, inflation uncertainty, and valuation pressures. Final thoughts: In short, 2025 has been a year of dramatic ups and downs, from the April tariff-induced crash to a resilient rebound propelled by AI-driven tech and strong earnings. Markets now hover near record highs, though valuations look stretched, and reliance on non-public trading venues raises questions about transparency. As central banks consider easing and global policy uncertainties persist, investors are advised to adopt a balanced, diversified approach, staying mindful of potential bubbles, geopolitical risks, and rate shifts. Thank you so much for watching. If today's video helped you, please give it a thumbs up and subscribe.